Good evening. Welcome to Option Center. It is Tuesday, 11/8/22. Happy voting day, everybody. If you're new here, go down to that bottom right-hand corner, hit that Option Center logo, and subscribe. We are pure technical analyzers here. So we don't do a whole bunch of fundamentals. The only thing that I really focus on is the Fed. Don't talk about it much, but when the Fed is printing, we are bullish. When the Fed is reducing the cash supply, then we are bearish, and the charts show it. So we shouldn't even have to say it. But right now we're going to go through ES on multiple time frames, from the monthly down to the 65-minute. We are in a downtrend. We're going to continue to be bearish, especially while we're underneath this 8 EMA. Let me look a little bit closer here. We repeat ourselves over and over on the higher time frames when you look at these videos. And don't forget to hit that notification button so you can get these videos whenever I put them out. But what's important is this 8 EMA is our trending indicator, and it's to the downside. We have lower lows, lower highs, lower lows, lower highs, lower lows. And right now we're attempting a lower high right now. Now, we came to this 50% retracement from the Corona crash. It coincides with the 50-month simple moving average right here. So we had a great bounce off of there, and we came back to retest the 8 EMA. Now, that's very common. You see it happening over and over again here. Retesting 8 EMA. We came down to the 20, retesting, down, up, down. We're oscillating back and forth, but pretty soon this momentum's going to speed up a little bit, and we're going to have some sort of flush. I don't know when that's going to happen, but we're looking for it at all times, including this into next week, specifically. So now that we retested that 8 EMA, what happens next? I do believe that we're going to turn around from this point. Checking out the indicators, we have the MACD headed to the downside, RSI headed to the downside. On the weekly chart, we're going to see, in more definition, lower highs, lower lows, headed down here. Okay, so this point right here at the 3,900 area is a very specific spot that we've been looking at for a long time. As we broke below it, we oscillated back and forth to it, and I've been pointing out each and every week, day by day, how we came back to it here in the recent history. It coincides with the 20 simple week moving average, came back, rejected off of it. Now we're retesting that 8 EMA. We're right above it right now, but we're still in a downtrend, you guys. We have to, until proven otherwise, this is, it's just don't fight the trend. Our trend is our friend. I say that over and over again, every single video. We came into this confluence. That's not only the 50% retracement, but it's also this. Let me scoot over just a little bit more. We keep repeating ourselves on this. We had a ping pong moment here in the market. Big ranges, but this is a huge support and resistance, where it's resistance became support and took off from there. So that's what happened here. The market does have memory. These numbers are extremely valid. Came down to it, bounced off, and now we're in a bullish mode in the very near term. But I do think that's going to turn around and continue our bearish trend. Now we can stop when things are invalidated. We have to turn our thesis around. Okay, so we're not going to stay bearish no matter what. If we start breaking above this 3,900 area, this 20-week simple moving average, we start breaking above there, we're not gonna continue to be bearish and fight the trend, especially in our trading. Maybe the analysis, we say we're still in a lower high, but the trading is what matters. We're here to make money. That's what matters in particular. I am short right now on all of my trading accounts. So we're going to go down to the daily time frame, see if we can see anything else. Trend is our friend. See what's happening here. Okay, so with the lower highs, the lower lows, we came to this is like a 5-wave move pattern down. So that completes a pattern, and we're starting to correct to the upside. Well, we made our correction right into that 3,900 area, and I do believe that's our critical point. We also have a downtrend line that coincides with that. We came up to test it today, and we have a potential reversal candle here. So I do believe this is a point where we're going to start to break down. Now, I know that the market likes to oscillate around when we have elections happening, when we have the CPI coming up on Thursday. We have our treasury auctions, the bond auctions and things like that. So a lot of things are happening, and it just so happened that we reversed in this market right after the 3-year bond auction, and we bounced after that because I don't think we're gonna. Even though I'm playing early, I'm not sure that we're actually going to make our actual move until after Thursday with the CPI. The data is so important, and we're so data dependent in the market right now. And like I said, I don't pay too much attention to fundamentals in general. I don't. Let's say I pay attention to them, I listen to them, but my trades are based off of charts, solely off of charts. So we have our moving averages coming together here, which means that we're tightening up and we're getting ready for a big move. If we start getting above this downtrend here, you better believe that I'm looking to the upside. We're going to figure out a way to see how this bullish count could be to the upside, and we're going to tell our Patreons and things like that. We're going to play that way. But right now, we're solely bearish. So after this reversal candle, in order to confirm, we're going to need this next candle to actually break down. We could have an inside day and then break down from there, but we're going to need some sort of confirmation to the downside to call this an actual reversal pattern instead of just a reversal candle. Okay, now after all this is said and done, 37, around this 3750, 3700 area where we reversed back to the upside. We get below there, and I do believe this trend is going to start accelerating from there, and that this is our point of continuation of the trend. So this move here with the FOMC was an impulsive move to break us down from the wedge, and I do believe this is a back test. So what I'm telling you right now is there's several different ways. You can be traditional. There's several different ways that you can look at this as a wedge breakdown, a back test, and moving down. There's the simple the trend line. Coming up to it, testing it, breaking down. Those are setups. Those are all setups in themselves. The moving averages, a lot of people look at that stuff and they tighten up. They contract to expand, And also, if you want to look at this from Elliott wave terms, I do believe this is a large 1, 2, and this was a 1, 2. So we have a 1, 2, 1, 2 setup. And really, if you're looking on bigger terms, it's a 1, 2, 1, 2, 1, 2, 1, 2 setup. And also 4 1 2s. There's so many 1 2s. But that's why I'm looking at this in such a way that price will accelerate. All it needs that catalyst, maybe it's the CPI, maybe it's the elections, but the CPI, the IV. If you look at the volatility coming up on Thursday, it's raised. Just like if you have earnings for a stock. If you look at Apple's earnings before it happens, you go into the trade tab and you look into Apple, for example, this is probably going to take a second, but let's see. I don't know what's coming up. Let's say NVIDIA, maybe they have earnings coming up here. If you look at the trade tab and you go to the implied volatility, my computer's taking some time here, implied volatility, then you can see when something is elevated. Maybe they have earnings coming up and, sorry, this is taking a, all right. So you have over here on this trade tab, we could go to wherever, let's see, the percentages on the right hand side. You see how the near term, they're very volatile. Well, you'll see a spike. If there is earnings coming up, you'll see a spike in the volatility, like lower, and this is higher, 77%. Maybe they have earnings coming up here next week or so. But the whole point is the ES, or the S&P, or even the SPX, I think that's the easiest way to look at it. Taking our time, taking our time. My gosh. All right. So. All right. So coming up on Thursday, what is today? We have 8. You should be able to see it from here anyway. So the implied volatility for tomorrow is getting into 44%. So we're looking at a big move. Looking into tomorrow, we have a spike here, and that's on the 9th. The 10th is actually still pretty raised, but it seems like volatility, the last time I looked at it, it didn't even like really raise until until Thursday, the 10th. And that would be the day of CPI, but maybe elections are starting to matter. Something's elevated here and something's telling us. So maybe overnight, going into tomorrow, we have a bigger move than what's thought. But yeah, the whole point is you can look over in this implied volatility area whenever you're looking at any stock or indices. If you're on Thinkorswim, other platforms have it as well, just in different spots. But let's go ahead and go back to the ES so we can check out the daily one more time, and then we'll finish off the video. So this is the next area. If you haven't watched the past videos, this is the next area that we're looking to get into. At the 3,500 area to the 3,200 with just a little bit of support in between. That's pretty typical for major areas. It's also the bow and arrow support resistance. You see how this is a triangle there? Well, right in the middle is a bow and arrow resistance. You'll hear that every once in a while coming up. So this will be the midpoint of this zone. And again, maybe I don't speak enough about invalidation, but now that this trend line here, if we get a close above this trend line, and especially a move above this 3,900 area, you better believe I'm out of all my put positions. I'm pretty quick at getting out of when things close. But you see, we're breaking down from this trend line, so we're just facing bearish. But just know that have your own tolerance. You know, maybe this is, you got short today in this candle, the top. Get out if price gets above there, and then reevaluate, you know, because this has this like ping pong type action here too. So you have the price from 3,700 to about 3,900 there. And price moved back and forth. Maybe that's where this might end as well. Maybe we get back up to 3,900 and break down. You know, downtrend lines, they are especially when you're making 1-2s. They're not that consistent. You know, they can hold a trend when you're from a wave 1 to a wave 3 perhaps. And you know, I'm baffling on a little bit, but the trend is down. We back tested, and I do expect a down movement here. Anything else? Let's move down to that 65-minute chart. see if there's anything else we can get out of this video. Like, if you're part of my Patreon, you get the Elliott wave counts every single day, sometimes a couple times a day, as we reevaluate. So we had this wedge breakdown from the 65-minute chart. We broke down from supply. We're back testing. So in this very near term, what could happen? We had this wedge. I kept the wedge there where we broke down, fake break up, fake breakdown, because we have all these catalysts that are hanging around from the elections to CPI and stuff like that. So we have the downtrend line here, and then supplies right above. So we really could, if you counted this in a certain way, A, B, and then a 1, 2, 3, and you get this 4. Maybe that was wave 4, because it did come down to this 3,800 area, retested it, and broke back up. Maybe we get a slightly higher high before breaking down, and we're prepared for that because we're out into next week and the week after for our puts. We weren't aggressive with the weeklies. Maybe that's aggressive for some people, but weeklies in the same week, that's my typical type of trade. But when we're on a turn, then we're looking for, we have a couple of different accounts that we do different things, but then we're looking for giving ourselves a little bit of time, a little bit of error, time for error, you know? So we get above this trend line again, we start changing our mind frame. Okay. Anything else to show you? We had this trend to the upside in the RSI. We broke down from that trend, back tested, and it's heading down there. So, you know, things are looking good for us. If we start to move higher for some reason, that's fine. But it's just how much higher, you know, especially if we start breaking highs of this 39.23. Now, I will go to the daily one more time. And the reason why I want to do it one last time is just show you that from this, I'll bring out the retracement. From this retracement area from the top here, actually from the top here, if this is a 1, 2, we came right back to the 50% retracement. So that kind of leaves the door open. You see that 3,900 area? That leaves the door open for us to still get to that 4,061.8 typical retracement. Now with the Elliott wave count that I have, I don't see that happening, but that'd be a lot more complex. So we have to be open-minded. And maybe if CPI, whatever the market says, this and that, and we start to break to the upside pretty intense, you see that the 4,000 area, we would maybe have this an A, and then a B, maybe we break down for a C, and then a bigger wave C to the upside. So in other words, an A, B, C to the upside. We have to keep an open mind that we could, you know, retrace back to that 4,000 area as our most bullish bearish scenario. But for now, we are breaking down from downtrends and things like that. And I think this is a complete wedge, and that we break down from this area here. So we're holding on to those, and then that's about it, you guys. I think I've waffled on for a little bit too long. We're going to complete this. Have a wonderful night. Don't forget to like these videos. It really helps get these videos. And don't forget to put comments out there. I'll get those whenever I can. And we'll talk to you soon. Have a great night.